Hope you're doing well. We've got Fed today, we've got the FOMC, we've got the press conference as well. So all eyes on that. So whatever you do today, do be aware that there's going to be a big hustle as we go into that risk event. We've still got 11 hours to go. So I did publish a trade of the day today, but just note and accept the caveat that we've got that huge risk event. So if you're in nice profits, you can just move your stop at entry and then you can make it risk free. It's going well because it's a risk on indication and we are risk on at the risk calculation. So the crowd are caught, they're stuck short. The 25 difference is quite tiny. It's a little bit of indecision, a bit of apprehension there. VIX is below the yearly pivot, which is your midpoint between the low and the high of the year, this year, sorry. And it's been a long year actually. So that's obviously important. The 26.5 is the midpoint between the high and the low, and we're below the midpoint. There's Kiwi, there's the euro and the pound. And maybe you could look to short the euro, look to buy the Kiwi, look to short the pound. Note what the yen's doing. It's getting quite large, so that indicates price performance is doing well. Poor performance is a small bubble. Okay. So like I say, they're trapped. So we are risk on at the big picture. The 25 difference is very subtle. The yields fell at the near term and the 30-year, but they rose in the middle. And so that's what's happened is that it's pushed the 12-month higher, and these mid-dated yields have risen. But if we want risk on near term, we need these to come down. These are way too high, so they need to come down quite a bit. And we'll have to see what happens after Powell. He might soothe the markets, and if possible, he's going to pivot away from his aggressive rate hike mandate. So if he projects like a little bit of dovishness there, then these can come down. And it looks like maybe we might see some kind of resolution from Ukraine and Russia. Russia are withdrawing troops due to losses. So if there's a resolution in there, then that's going to help these as well. These need to come down if we're going to be risk on. Okay, so we've obviously got a clear inversion of the 3-month and the 10-year, for example. That's yielding a better return on your investment than 10 years. So, there's panic near term, which is not good for risk on. We need these to come down for risk on. Okay. Not much movement, to be honest with you. EJ was moved to sell, but note there's a mismatch. And S&P is a sell there, so that they were short another long, but we're close to zero. So we can teeter on the S&P. So I think we need one more flush, and so we've got to be a little bit careful with our trade of the day. It is going well, but just be careful. And there's some stats for the weekly majors. On the 1 year, they're quite poor. Look at Kiwi USD, minus 21%. It's not very good. And they got pretty much slammed yesterday from the PMI yesterday. We went quite risk off. And so as a result, the dollar appreciated. So a little bit of a mixed bag there. So be careful. Dollar Swiss is the leader. Yep. And Euro USD is the laggard from last Wednesday. This compares the data where we are right now to the data from Wednesday. So it doesn't reset on Sunday. It just takes the data from a week ago. We need risk on for this, and we could potentially be risk on. Our risk calculation is indicating that would be the case. So we'd probably be okay, but just be careful of the risk event later. Don't hold it while we're going into the Fed, because we could be risk off at the press conference. So if you made nice profits, look to take profit prior. Some tiers there if you want to join, that's fine. There's the Patreon link there. So if you want to get this bulletin, it's quite affordable. If you want to get Discord in its entirety, it's that. If you want to get the spreadsheet and Discord, it's that. And it's a discount if you're on FX as a size subscriber. Telegram, which you probably know about already, and Discord link as well. And so this is the S&P resistance. That's 3 attempts now at breaking that. So it was important. I figured it would be important, and it looks like it is. So we need to close above that for bullishness, but I think it could be a good resistance. If so, our trade of the day is going to probably perform quite poorly, but what quite nicely on the week. The Monday and Tuesday's trade of the days were good. So with any luck, we go risk on, and our trade of the day will be really good. But we'll have to wait and see. Now, what we might need with S&P, we might need one more flush because they went long here, and if they go long, then they get punished. So we don't want them to be buying; they need to be selling. And so this is what happens when they go long. They get really, they get slapped about quite a bit. It's quite aggressive moves there. So this is what happens when they buy. They have to get taught not to, so they have to sell. And a break in that support should encourage them to sell. And then a break of that support would be a buy opportunity. Likewise, they went long, they got punished. See, they sell, so price comes up. They go long, price falls. Okay, and they could look like they might be going long here. So this is why the hexagon warrants a bit of a caution. A break of this should encourage them to short. If so, then it's a buy opportunity. Note where they sold it. So I wonder whether or not we might see a little bit of a payday because they've got absolutely destroyed, really, really badly. And so we might see a little payday here where, they're just going to get paid because the herd have got absolutely destroyed, like I say, and they shorted it there. So it's really painful. Potential scenario there because they've got, pretty rinsed. This is a naughty candle. It caused them to sell, and they did, and they've held on to that bias. They might be going long, so this might fall. But I'll do a quick 2-minute video in Discord, in the private feed. Gold, they went long, so price fell, and then they went short, so price rose, and that's how it is. So they're selling it here. If you can see, there's a deviation between the moving average and the SSI. The SSI is Speculative Sentiment Index. It tells us that the retail herd positioning. So it's really useful and very, very powerful, especially when you use the moving average. So that's that. So there isn't anything to be said there. So when they go one way, price does the opposite. when they sell it, price goes up. Stop loss cluster updates, and we've got large liquidity targets above AU and EJ. AJ is undecided. It just doesn't know what it wants to do at all, and it's just at 50%. And so that's probably an eye on dollar yen, I think. I'm just going to be monitoring that because it might set the precedence for not only yen pairs but for dollar as well. So we'll have to wait and see what happens there. We've got a strong yen bubble. If you see the bubble at the top of the video, technically it's performing well because we can see the size here, the yen bubble, but we do need that to come over here because we want them to sell it. Okay, so it comes down here, then it's more of a buy every time. If it goes over here, it's a sell because they're buying. We don't want them to be buying if you're long. Okay, bit of contrarian logic there, but it's very powerful, the bubbles. Come down, where are we? There's liquidity target. So huge amounts of stops above. There's a huge, very large size, and likewise for EJ. And this is a new thing where I'm just going to publish this just prior to the London Open to see how we are. Volex is VIX basically, and we're just looking at risk. So for our trade of the day, because we want risk on, we want these to remain green. If they go red, our trade of the day will be poor. Okay, so it's very simple. Keep an eye on your VIX, keep an eye on your risk. And this is from Quant Tower. I shared a link in Discord how to get it set up. It's very easy and it's very powerful. So dollar can probably reverse a little bit, but everything else is punishing them. Excuse me, the euro is totally punishing them. Pound, yen, and Kiwi. We've got a perfect score. So whatever they're doing with the euro, they're getting punished. Whatever they're doing with the pound, they're getting punished. And likewise the yen and the Kiwi. So they've gone long euro, and so price fell. They've gone long on pound, price fell. They shorted yen, and price rose. Right? And Kiwi they shorted, and price rose. So whatever happens, price should, in speech marks, do the opposite, and this is how we get our failure rate. So this is quite normal, and it's good because it tells us that the sentiment is working. We don't want a low score here because then it tells us the sentiment isn't working, and then we might as well just use fundamentals and technicals. So it's a good little metric there. So we know that the crowd are getting destroyed, which is good for us. Yeah, that's a little bit of a thing there. So Euro Kiwi, we did actually made 50 pips at some point in the afternoon, but we had that risk event, and then we netted 17 pips at the close. But we had that risk event on the PMI, and we went risk off. So that's just what it is. We have to be careful with the risk events in the calendar, and also if you're up quite a bit of profit, you know, you can TP, or you can just like take profit, take partials, take half off, and move the other half to entry, you know. But it'd be quite sad if you were up 50 pips and it came all the way back down to your entry, and then you got out at like 5 pips profit. You know, you just trying to, maybe you need to reward yourself, because it's quite a tough gig trading. So if you're up quite a bit, then, you know, there's no harm in taking profit or taking partials. You don't have to fully close, but it's good to reward yourself. So GU is actually a buy. Bubbles have agreed, and the currency pair itself has agreed, and technically we're a strong buy. Be careful because we've got the Fed. All right, so this is probably could tumble and it could puke. So be careful there. And all eyes on this. And we've got the press conference, so we're going to have some Q&A, and what Powell says at the Q&A, because it's quite spontaneous, and I don't know if it's already pre-planned, his questions and answers, but his answers are going to set the precedence for risk. So there's a lot of weight on his shoulders. We've got a PMI from Australia, so be careful if you've got Aussie exposure. This could potentially move. We need the PMI to remain above 50. Below 50 is a recession warning, so be careful there. If we go below 50, that might be bad for the Aussie. Keep calm, always trade safely. I'm going to do a quick 2-minute video in Discord, and we can cover the indices, and we can look at gold as well. So have a good day, trade safely, and I'll speak to you soon.